Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. It is Tuesday morning again. We are back. I am Barry Saywitz, president of the Saywitz Company and managing partner of Saywitz Properties, and we're here. We're going to talk a little bit of real estate. We're going to talk a little bit of economy, and we'll make up some other fun stuff. So I appreciate everybody tuning back in. We are still in the midst of what I'll call the Iran conflict, or whatever you want to call it. So before we get going, I do want to do a shout out to all of our servicemen and women who are potentially in harm's way and are doing the hard fighting and the good thing, and we wish you be safe, be quick, be successful, and get us out of this thing on top. So with all of that said, on a lighter note, I want to welcome our guest, Jim McKenzie, principal with Greenwood and McKenzie Real Estate Company here in Orange County, sort of long-time real estate player in the community. I appreciate you coming on the show, Jim.
Well, Barry, thanks very much for having me on the show.
Yeah, so I know your company does a lot of different stuff, but before we get to it, I want to kind of rewind a little bit, and I want to talk about your history of kind of how you got to where you are today, because we sit here in the radio studio at on the campus of UCI, University of California, Irvine, which is where you went to school, so it's a little bit of a homecoming for you.
It's quite a bit different.
There's more than just a couple of buildings.
Yeah,
now, right?
Exactly.
Yeah, and so the university has certainly come a long way. But for you, you went to school here, and then I guess if we rewind a couple of years back, you get out of school. Was the plan always to get into real estate, or how did that happen, or what was the plan when you got out of school?
I think it was pretty much to get into that. I had done an internship with a land planning firm, which was, kind of where the avenue I was looking at. And then the most interesting thing is I got involved in helping my family and our neighbor build a 7-unit condo complex where we tore our 2 houses down, and I ended up being an assistant superintendent and handling the land draws for our construction loan and things like that, and doing a lot of labor. But I had been a lot of interest in like architecture and things like that, so it was kind of all those kind of things on the that all encompass real estate. And so that was really kind of, I think, probably a jumping off point.
And that was, I'll call it mid-'80s,
Yeah,
right?
mid-'80s, yeah.
So market here is booming. Orange County looked dramatically different than what it does today.
Yeah.
But lots of activity, lots of growth and development.
Yeah.
I got involved a couple of years later, and so I started in October of 1989. Market crashed November 1989, which was only a couple of weeks after I started, and then it became a totally different ballgame.
Oh, absolutely. I was working for a city as a city planner. I'd worked actually in real estate research for a couple of years, and then in the late 80s, starting in 88, I worked for a city, and we had a huge project come in the city of Signal Hill, which is a small city, and so it was still very go-go, but then, I bought my first house in March of 1989.
Right. Just to get a taste of it.
So,
right, as it gets in.
I had my taste of being a civil servant, and then that was not how I was wired. And so I was lucky enough to go to work at a position with a forensic appraisal firm. So we expert witness,
right.
Litigation, all these things. So it was a very unique process. I've never done form appraisal or anything like that. So it was very more research intensive, and it was very interesting learning
Analytical.
process. Oh, very analytical. We covered all of California. I was an expert witness in Orange County, Riverside.
And at that time, people were falling down, so a lot of people suing each other, banks taking.
Well, and it was their redevelopment agencies were still very active. Caltrans. We did a huge reservoir project in Riverside. It's Diamond Valley Reservoir. So you had all the public agencies acquiring, we had a lot of condemnation work.
Right,
so
right.
We remember all the 5 and the 405.
Right, when they were buying all the houses. And people would
or
say,
up in Anaheim and all those areas. So yeah,
sure.
it was quite a lot going on.
So you do that for a while, and then somehow you get involved with Greenwood and Son.
Interestingly enough, my mentor at the appraisal firm, brilliant man, had met my now partner, Carl Greenwood, and because we were an appraiser, and he'd actually referred a client who had a property condemned and was looking for, somebody to help them manage a property. And, my partner had gotten to know him years before. And so we kind of just, cultivated that. I actually asked him to hang my license because I had my real estate license, and I was just doing sort of friends and family.
Right.
And but I was at like a Century 21, so I was getting about 45 cents on the dollar. And I said,
But you got the yellow jacket. Right,
yeah,
back in the day.
So I, we talked to him and said, hey, this can be a win-win. And he thought it was a great idea. And we'd, kind of have lunch every, couple of months, talk about the market. If he had something going on, I'd give some research for him, things like that. And even my mentor at the time, and I was a partner in the firm, had said when we had lunch, the three of us, he had said, if Jim ever wanted to go to work for you, Carl, I would definitely support it. It could be much more lucrative. So he kind of already gave me that endorsement. And then late in 1998, my partner Carl approached me about the idea, and I was kind of at a pivot where I could see my mentor was going to retire, and I was a partner, and the value was all goodwill. I mean, it was kind of, I wanted to move to the other side of the table. You're the consultant. I wanted to be the principal.
Right.
And so it was very good timing. And in fact, Carl was kind of surprised I said yes so quickly. So it was.
And so then you get your name on the door.
Yep.
And at the beginning stages of it, was the plan deals? Was the plan management? What was the focus at that early stage?
Well, it was, I think, growth based on relationships. I mean, even then, because Carl's dad started the firm in 1958. And so it was just and Carl came on in 67. And so it was definitely based on relationships. And he was, I don't want to say a one-man gang, but it was much smaller. And I was obviously, come in with the idea of being a successor and a partner. So that was a goal all along. And so I think I brought in a new energy to I don't want to say push the envelope, but to pursue more rather than, kind of just stay where we are and be comfortable kind of a thing. And obviously, I got him on board, he was, because again, he had been the only one, sort of sourcing deals or overseeing things, and kind of the timing worked, and it really evolved from there.
And then, so you're at a time also in the growth of Orange County. Man, it's continuing to grow constantly, and times are pretty good, late 90s, right?
Yeah,
Until it dumps again, and the dot bomb era.
Absolutely.
But so things are going well, and so you're growing the business, and you're doing management and working on deals and talking to investors. And so from that point until today, lots of ups and downs in the market, lots of gyrations, right?
Absolutely.
Recession, dot bomb, COVID, all kinds of fun stuff that as a landlord, as a property manager, you're dealing with lots of things that get thrown your way.
Oh, absolutely. I mean, obviously the first go round in the financial crisis, we were, we had our share of close calls, but we actually did pretty well through that. I think actually shall we say, we lost one building since I've been at the company, and it was due to a tenant bankruptcy and kind of just bad timing. So I feel like that was pretty successful. It's too bad because it's a building now. I think
right,
would be perfect for like an iOS. That's kind of a new sector. Industrial outdoor supply and things like that. But yeah, no, definitely had to be very nimble and creative. I mean, I think the other thing is with the investors is always having them aligned with us and having kind of that longer term perspective. I mean, as it is now, we still have several clients that we've had for in excess of 50 years, and we're our third generation of investors. So it's all all
Right.
private.
So the panic is not as bad if you're in it for down the road, as opposed to the person who's needs money and needs to get out.
Right. That yeah. This is putting food on the table, or that they're living off
Right.
dividends or distributions, if you will.
Right. I mean, I tell people I was like 6'4" before the recession, and I managed to get through it, but certainly not unscathed.
Yeah, exactly. Absolutely. There was and again, we had a big project we acquired in February of '08. And so, and
Precipice of the downfall.
Yeah. And so we were able to, hold that and, kind of manage it. And we, so we had made a commitment. And so I think, the ability to, make adjustments in expectations and things like that, and clients understanding that. I mean, we've, been, far more successful than unsuccessful, but again, we're not perfect by any means. So,
and it's interesting because you make it through the recession. You're like, oh my gosh, I never want to be there again. And I'm glad I actually survived it. Many people did not and had to go different paths or lost their house or their building or whatever it is that they were doing. And then you figure out nothing like that should hopefully ever happen again. And nothing the same. But then you get hit with the COVID thing, and then you're like, oh my gosh, this is uncharted territory where I'm not even supposed to be open for business, but I have to be because people are calling with water leaks and electrical problems and whatever maintenance things are going on, yet you're technically not deemed an essential business.
Right. I mean, we were very fortunate. We had just shifted to a cloud-based property management and accounting and everything, started it in 18 and finished the transition by, early 19. So we were in a position for people to work from home, at least as far as our office staff. But again, we have a big on-site staff at apartments, and kind of how to maneuver around that. We had on our commercial side, we were proactive with a lot of kind of workouts with tenants. I'd say we probably did about 25% some sort of lease restructure, abatement, deferment, or we let, especially if they had a good record, we'd, apply security deposits to rent up front, things like that to kind of
whatever you could do to just try and buy some time, because the other thing is nobody knew when it was going to end, right? So people came crying, going, hey, what do I do? I'm not open for business, or I don't have the money, or my clients aren't around. And then you're like, I can't solve your problem. I don't know the answer, right? I mean, I can just help you just kick the can a little bit, and then hopefully, everybody gets back on track, which is crazy because we had people, hair salons, asking if they could cut hair in the parking lot. We had a physical rehab, taking weights out in the parking lot, having people working outside, and then obviously with the restaurants and everything else. It's just whatever you could do to just try and stay alive.
Right. Exactly. I mean, you had to, it's cliche, but really think outside the box. I mean, we also have a portfolio of LA fitness clubs that we handle, and they were shut down, federal shut down on one day.
Right.
And I think, I think they had to lay off like 30,000 people in one day, and we get a notice that, hey, we're
not paying.
We can't. But the good thing was we had developed a relationship with them, over the years, and become it was a very, equitable relationship, very much not just confrontational tenant landlord, but very partnership. And, we were able to come up with a solution that, definitely, we had to, get our clients on board, and we, were able to bridge the gap. We gave them, some rent. It was deferment, and then we converted it to complete forgiveness. And, it's been money well spent since then, in terms of our relationship. But yeah, and even within that, we let our lenders know right away, and it was kind of very interesting, the variety of responses.
Yeah. Well, and not dissimilar to the recession, where we had some lenders that were just in complete denial. Like, look, everything's fine. I mean, if you're the one with the problem, it's your problem. It's not an our problem. And then we had other lenders that were like, okay, let me see what I can do, but my hands are tied. And then we had other ones that were like, okay, I'll actually have a conversation with you. But with the COVID one, I think it was kind of, no lender wanted the property back.
Right, exactly. There's no template for anything. And, I think no lender, and I think the ones that recognized that right away, I think did much better in terms of that, to be, shall we say, proactive or realistic. And we, went in, sort of like, hey, we would do this, and we offered things like, hey, can we just go interest only, or various things like that, right, to solve it. And it was we were able, again, we had the client base and trust to get through that, and obviously we didn't have to be in a situation of liquidation or I say panic selling, but
right,
we're just being, hey, we just got a clean house kind of a thing. We were fortunate that way.
So let's get off the negative stuff and we'll fast forward to, I don't want to relive either of those scenarios again, but it was painful. But so let's fast forward to today, because we got interesting economic times. I mean, ever changing. I always tell people that the worst thing that could happen for a real estate guy is to have nothing going on, because when there's nothing going on, then there's no transaction volume. If you have a rising market, it spurs people to spend money and buy deals and do things. And when you have a declining market, there are people that are selling, so there's opportunity. But the difficulty, I feel, is that we were in a place where people were waiting for the election last year or the year before, and then the economy was chugging along okay, and then people were waiting for interest rates to come down, and then they came a little bit, and then now it really hasn't. And now you've got tariffs and war and inflation again and volatile stock market. A lot of craziness going on in the short term. And then how do you navigate that? And then how do you set expectations for your clients and for your own business plan in terms of what you're doing?
Well, yeah, I mean, I think, yeah, you hit the nail on the head there, is that, there's no playbook for any of this. And I think at some point it was kind of okay, we sort of maybe as a narrow focus is like, we got to keep doing what we do well, and consider some of this as somewhat background noise, or maybe, kind of a moment in time, rather than this is going to be the ongoing trend kind of a thing. I think interest rates aren't going to go back to where they were.
No.
I think that's
and really the prognosis now is that you just don't expect anything
right,
dramatic between now and the end of the year. So if you were hoping that rates would come down, or if a real estate broker were to pitch me or you a deal to buy,
right,
they go, oh, well, rates come down, this deal gets better. I'm like, I'm not buying it based on
right,
a promise, right? I'm buying it based on what are you selling me today? Right?
And what's the real value?
Right, sell me this cup. Don't sell me what this cup's going to be when he grows up.
Or it's like, you're buying the car based on the payment rather than the value of the car,
right. And so I feel like you're absolutely right, which is you've got to keep doing what you're doing. Although I do feel like there's challenges in that you have the whole ICE thing where we have tenants in the apartments that don't call for maintenance because they don't want anybody in there. We had a tenant that went for an ICE interview thinking they were going to be able to get citizenship and get on a path for that. And in fact, they got put on a plane and got deported. And then the husband said, I'm leaving. I got to go back to Mexico. I got to go chase my wife. Right. And so you have those things. And then you have tenants coming in to apply. And then you've got to be very careful as a landlord that they weren't evicted or didn't stiff their last landlord or aren't fully documented or didn't fudge a pay stub to try and get an apartment.
Oh, absolutely. We went through all of those. Yeah, we noticed a couple of projects where, we could tell right away delinquency, popped up where, again, family and, one of them, they weren't going to work anymore. They're just staying home, avoiding being out in public. And so, income dried up and, things like that. And so, yeah, we definitely saw that. And, again, you don't know what you're going to get with the next tenant, in terms of that. And then obviously trying to deal with an eviction process for that, even, away from, kind of the ICE and all that. But we definitely, whether it's vendors or, definitely on-site staff as well as, residents, it was definitely, and still is,
right?
Still is,
yeah. I had a meeting last night and I looked at 4 sets of applications, and then we're like, these, how can we approve them? They have holes in them, or they have bad things, or we have an unverifiable income. And you're sitting there going, I want to rent a place. I want to make a deal. And the leasing person says they seem like very nice people. And they're like, yeah, but I just got rid of a bad tenant. I just took a bath on that. I don't want to do it again.
Yeah, it's very, very challenging, and again, it's, it's obviously more art than science now. I mean, you definitely, the idea of,
And you still don't know. I mean, there's,
Right.
if somebody's got a criminal thing and it's from out of state and you only run the criminal in California, you'll never know.
Right. No, it's the whole process is definitely more challenging. I mean, I've seen it where, even our on-site staff, it's been not burdensome, but you definitely can see where you need to, a little more pat on the back or kind of motivate them to make, the right decisions. And we've, kind of always tried to do that in terms of, compensating. We're not compensating for, hey, a set occupancy. We want you to make, good decisions and not be compelled.
Right. Not making deals for my bonus, right?
Right. Exactly.
Yeah.
And I think that's, but yeah. And we're lucky, especially on our residential side, we have a couple of young ladies that are the head of the department, and, they've started, one was a leasing assistant, one was a porter, and have grown through it, and, definitely, hands-on. So in terms of been there, done that with, most of the things that our on-site staff sees. So that's a pretty lucky.
I find that in today's world, you have to try as much as you can, as hard as it is, to know more about your tenants than ever before, right? Whereas before you'd be like, look, I'm your landlord, you're the tenant, you pay me the rent. If something breaks, I'll fix it. And then that's our relationship. And now I really got to understand what's going on, because if you have 4 other family members living in there, I need to know. If you have 2 dogs that weren't on the lease, I need to know. If you lost your job.
You're running a body shop out of your garage.
Yes, fixing bikes and cars on the weekend for extra money, leaking oil all over the place. And then you've got the insurance company and the lender doing drive-bys that they never did before, looking for things to hit you on. And so, yeah, I mean, I drove around all weekend looking at properties, and it's amazing, what you'd find. And then you find stuff on the weekend you wouldn't find during the week because people are at work and not at the property. And so it really is a challenge. And then as much as you want to clean up whatever shenanigans are going on, you also don't want another vacancy and lose a tenant. So you've got to balance with that.
Absolutely. Yeah, I mean, we really try to encourage, we're fortunate in a way to have size where we have on-site staff, and really encourage, we really want our managers at a minimum and, at least a maintenance to live on site. And we want them to not be behind the desk, be out and about and see,
Right.
have your finger on the pulse of what's going on around, and, those kinds of things. I remember years ago it was more related to acquisition, but it fits the bill as well as, I forget the gentleman, I think it was affiliated with Marcus and Millichap or whatever. I was at a conference, and he liked to drive the parking lots, kind of in the off hours to get what he called the sheet metal index, to see what the vehicles looked like and, what was going on there, that gave him, a glimpse of what might be going on inside the units and things like that.
Inoperable cars, expired tags, right?
Abandoned, vehicles, or, things like
bottles
that.
and cans stacked up high that causing a potential health risk, right?
Or they're, or beer bottles because they're, hanging out in the parking lot.
In the garage, in the parking lot, whatever. Yeah, I mean, you got all that stuff. And then you combine that with the government regulation that they tack on top of it, at least here in California, right? So you look at other parts of the country and you wonder why people are leaving California from an investment standpoint, looking at Arizona or Texas or Colorado or some of these other places, because you just don't have all the add-on drama. I'll call it, that you have, right? Whether it's the balcony law, whether it's the refrigerator law, whether it's the eviction restrictions, and then all of the requirements that the insurance company throws at you now, because insurance is a difficult,
absolutely
difficult.
And that's coupled with, when your lender does their inspections,
right? You do your own inspection, and then like I feel like I'm the most critical person there would be, right? And then it's not true, because then you have other people going around looking for things, trying to find stuff wrong with your property.
Right. Because we have 18 projects, and we have 15 of them with loans with either Fannie or Freddie, institutional. And we actually got through. We had a property come through where the lender said we didn't find anything, and we were like dumbfounded. They did their annual, and it didn't have a laundry list of, marginal, there's a crack in the side, really.
You have a loose fence board. You
Yeah.
have I got dropped from one. They said there was a hairline crack on one of the steps, and I said, well, you just paint over it. And it used to be a fix-it ticket, right? They'd just send you a letter, you'd fix it, you'd send them a picture,
Right.
and you're done. Now they're like, you're dropped.
Yeah.
Right. And then there's no going back. It's like we were looking for an excuse to drop you.
Right.
And now you got to go shopping around and do a bunch of other stuff. And not to mention, we want to know if the roof is more than 20 years old, we either want you to put a new roof on, or we're going to drop you because we think there could be a roof leak if it rained. And then what kind of nonsense is that? And then why are you, as the insurance company, dictating to me when I change out the roof?
Right. Yeah, it's.
And then you have to go to your investors. I have to go look in the mirror, right? And then go, do I put a new roof on when it doesn't even really need it?
Right.
Right. And then you buy a property, or you look to buy a property, and they go, oh, the roof's great. And I go, when was it changed out? And they're like, oh, and you figure out it's more than 20 years old.
Right.
And then you go, well, I'm going to need a new roof. I'm going to need you to chip in for that. I don't need you to buy me a new roof, but you have an old roof. And they go, well, it doesn't leak. Tell that to my insurance company.
Right. Exactly. Yeah.
And so I find lots of challenges today, both on the tenant side, on the insurance side, and then just on the operational side. And so I guess one of the things I wanted to ask you, because you do both commercial and you do residential, on the technology side, things are also ever evolving. You mentioned going to a cloud-based, but we've been exploring, outsourcing stuff for like maintenance calls and things like that. And then looking at answering service that speaks both Spanish and English and Chinese and other languages, so that people, can get their point across in hopes that they will call when there's maintenance, because we want them to call so we can fix it.
Exactly. I mean, that's, it's not quite your question, but that's one of the things where we've had tenants, say, well, I haven't complained about X, Y, or Z, for the last year. And we're like, we want you to tell us if there's something wrong, because all it does is lead to something bigger or impacts other residents, things like that. We want to know, when you've got a problem. But yeah, no, we've been looking at, especially in terms of like the leasing, workflow for maintenance orders,
Yes.
things like that has been, and then even in terms of, leasing, getting responses,
Tracking leads,
tracking
what happened to the lead, right? So that it's not like you just have your manager or your
Right.
leasing person telling you, hey, it's slow, or hey, I got this rented.
Right.
Give me some data.
Exactly. I mean, that's, and I'm sure you do it too. We've been, shopping our managers, our sites a little more lately in terms of, they're smart enough sometimes to recognize that they're being shopped, but for the most part, we get a pretty good read. And so then to, kind of identify, okay, what if we have a property that's lagging? Is it, just the market or the dynamics or, circumstance, or is there, there are definitely some dials we can change in terms of staffing and approach. But yeah, no, we've definitely been, I won't say we've been, fully embracing AI, but we've been trying to, lean in more, to technology, especially, our platforms worked pretty well, and so that's been a blessing, and just in terms of kind of continually evolving. But yeah, even again, all of those kind of contacts and reminders and calendaring and things like that.
Right. I think in today's world, you've got to document what you're doing. Right. Old school would be somebody calls the tenant, talks to the tenant, they have a phone call, and it's resolved, and you're moving on.
Right.
Right. And then it went to, well, take some notes. And then it went, why don't you enter your notes somewhere? And then it went to, why don't you send an email? And what I find is none of that's enough if there really is a problem. Right. And so, I had a problem with my refrigerator at my house, and so I called the manufacturer, and they said, oh, we know who you are. We can pull up your file. We can look all the way back, and we've
Right.
got every single, note from every conversation. And I feel like you need that as a CYA.
Oh, absolutely. I mean, I
In
think,
case somebody calls and says, hey, we have it all the time. So I called 3 times, nobody called me back. No, that's not true.
yeah.
Just
Yeah,
not true.
yeah, exactly. I mean, I think that's just in terms of some of the record keeping, and also when we're reviewing staff and things like that. We have the information that we need.
Right. I mean, because you want to rely on your staff also to be part of the program, and they say, oh, I called them back.
Right.
I don't want to hear I called them back. I want to see it.
Right.
Right.
Yeah.
So, yeah, I think those are all real things, especially in today's environment. I guess the other thing I want to ask you about is, so where do you see the company going moving forward, you have these long time investor relationships. Is there a desire to grow the business, to bring in new investors, to look at new deals, or is the market just not right for it at the moment?
Well, I would say, yeah, we definitely are looking to grow. I would say, it's going to definitely be targeted growth, from that standpoint. We are looking, to bring in new investors and looking at new opportunities. Obviously Southern California apartments are, kind of a challenge right now. I mean, even for years for us, we were fortunate to be able to, we have a client that has the bulk of the portfolio to help him grow that. And he had the mindset that was aligned with us. But in terms of, kind of what to do to raise new capital for, a new project, and kind of what the return expectations are.
Right, because a guy comes in and says, hey, I want an 8 or a 9% return. You're like, I can't get it for you.
Yeah.
It's not there.
I'm, lucky to buy at a 5 cap and I'm, at negative leverage and, the math doesn't math.
Right. And my expenses are going up and I can't raise the rent to keep up with the expenses. And so you might be left with a 4% or a 5% return. And then somebody looks at you and you look at yourself in the mirror and go, well, I can get that in the bank or I can get that in a T-bill. And so why do I do it?
Yeah, I mean, and I don't want to be negative, obviously we're trying to be upbeat about this. And yeah, I mean, I still think Southern California, certainly on the apartment side, I still think Southern California, especially Orange County is obviously one of the strongest markets in the U.S. So, but, we've had some flat rent and I think we're going to start seeing a little bit more. There was a lot of, absorption and it's definitely, you've got a lot of all the high-end stuff, and again, versus, workforce housing,
right.
And so the housing affordability is not going to change. And so I feel like that's going to continue to drive that market, in terms of what a starter home costs now and things like that. So
yeah, I mean, the whole idea that the tenant says, well, I'm saving up to buy a house. We don't hear that hardly any at all anymore. Mm-hmm. What we hear is I'm in a 3-bedroom and my son's going off to school or he's getting married and so I only need a 2-bedroom.
I need to contract, yeah.
Right. Or I'm in a 2-bedroom and I'm struggling to pay the rent, so I'm bringing in 2 more family members, and then all of a sudden now you got a bunch of people living in there, and you got wall-to-wall beds because they need that income to be able to afford it.
Right. Yeah. I mean, I think the only way to have affordable housing is to have more housing.
Yeah, which is a challenge in of itself. And then the issue is, and you see it here, just down the street where they're building all these new apartments.
Right.
Those will not be cheap, and they're not subject to rent control. And while they may have some small percentage that may be deemed affordable housing, the vast majority of it is market rate housing.
Right. Yeah. And so exactly, I think that's, you see that across the board. And, you don't want public agencies building housing because that's even more of a boondoggle in terms of the costs and the regulations and things like that. So it's, definitely trying to find a better avenue, to do that.
I find that on the investment side, on the acquisition side, I'm seeing a lot more deals now than I've seen in the past several years. But the ones that make any sense is a very small percentage of that, because I feel like you still have sellers that are trying to get yesterday's dollar, or as a seller, they said, well, if you got me X, then I would sell. Otherwise, it's not worth it. I'll just keep it. And then the broker says, yeah, I can get you that. And then he tries, and then he either gets it or he doesn't. I mean, you can't hurt a guy for trying. But those are tough deals to pencil. And then, like you say, if the interest rates are not coming down and the underwriting is stiffer, right, then you need to come up with more equity. And then it also, the more debt you're putting on at 6%, it just hurts the overall return.
Yeah. And exactly. I mean, you have that, hurdle where people will say, well, I can get that return, and even if you get some appreciation, like when we're underwriting deals, we never underwrite appreciation. It has to kind of make sense year one, and kind of appreciation and value.
Right.
Growth
the whole I'm going to get it back 5 years from now.
Right.
It doesn't hunt for the guy who wants a check every quarter or every month.
Right. Exactly. So, but yeah, and I think we've seen it. Yeah, there's definitely still a disconnect between sellers and buyers, and yeah, I'd say there's more. There's more deals maybe available, but are there real sellers out there? Things like that. I haven't really seen it that much in apartments, but it was kind of like, a lot of people were lucky that rates stayed low during COVID because, they didn't have that,
that hit.
They weren't going to, like right now, you could easily go up, 250 basis points on a refi if you
Yes.
finance years ago. And so,
Well, I think that also hurts the residential market in that you had a lot of people trading up for a bigger house. And then instead they said, well, forget it. I'll just either stay where I'm at and do nothing, or I'll just remodel the bedroom or the kitchen, and then I'm not going to do it.
Right.
Which puts less inventory on the market, which keeps the purchase prices higher.
Right.
But then there's still just lower activity.
yeah, there's definitely less liquidity that way. I mean, you see less turnover. I mean, there's obviously been talk about how to figure out to encourage, in terms of how people might deal with capital gains, these long-time homeowners and being able to maybe carry their tax base or things like that to try to shake some things loose. But yeah, you're definitely seeing where people, I don't want to say it's locked it up, but yeah, there's, the inventory in, certainly anything in the, under $1 million house front, is pretty limited, which is kind of scary to think about. But, and we haven't seen wage growth to keep up with that. That's the other end. So, from that standpoint.
So let's try and wrap it up in a bow, because Paul's waving at me like, hey, wrap it up in a bow. I think without sounding negative, there's no question there's lots of challenges, right? As an investor, as a manager, as a deal maker, to try and navigate through. And I'm curious, your sort of summary of it. Mine would be careful and be diligent and be smart about what you're doing. And you don't have to make a deal to make a deal.
Right. I mean, I think, don't deviate from what has been a success. I'm not saying you want to just keep doing the same thing, but I mean, really stick to the things the markets, things like that, product type. I think that, and I mean, it's still a great industry. I mean, I wouldn't change it for anything. I mean, it allows a lot of creativity as well as the analytical, again, your problem solving has to be a little bit different. Investors' expectations. I mean, I think the volatility of the stock market has maybe pushed people back that, they've things like that. So, I definitely feel like, yeah, you got to be careful and, be, judicious as best you can.
Yeah. And the risk taking is only to a certain point, I think.
And you have to have a long-term perspective.
Right. And I was going to say that because we have all kinds of people on the show. They said, look, I talked to a friend of mine last week. He said, look, Barry, if you buy it and you hold it long enough, you'll make money. I go, yeah, but that doesn't help me today, right? I mean, I don't want to overpay. I don't want to make a mistake. And I don't want to be nervous and thinking about it. And I'm not a panic, but I mean, it's true. I still believe long-term Southern California you're going to increase value better than you would get in other places. But you also have to figure out if you're cash flow driven, if you're equity driven, if you're appreciation driven.
Right.
And then if it's a combination of those, you just got to try and manage.
Yeah, exactly. I mean, even, I've had family where they're talking about buying a house, and I said, well, are you planning to live there for, 5-10 years maybe? It's got to be a place to live rather than, it's not a...
Right, it's not I buy it and in 2 years I flip it.
Yeah. So, but yeah, no, I definitely agree in terms of... and I think, always the key is to look at what the underlying real estate, you're not buying a yield or a return a lot of times is what's, the real value, and be good about assessing that, but understanding the real value of the real estate and the quality of it and things like that versus, just something that's shiny and, appears to have a good return.
Yeah, I try not to get emotional. It's a business, and if you lose sight of that, then you sort of missed it.
Yeah, if you fall in love with the property, it can be, it can come back to bite you.
That is why on the residential side, they're like, bring your wife, right? She'll fall in love with it, and then she'll hit you up. So, if people want to find out more information about the company, what's the website? Where can they go?
It's pretty simple. It's www.greenwood, GREENWOOD, and spelled out AND, McKenzie, McKenzie.com.
Got it. And so for anybody out there with property management needs, looking to invest, want to check Jim's picture out on the website, all kinds of fun stuff. Go there, check it out. Jim, I appreciate you coming on the show and sharing your thoughts and your wisdoms. Always good to see you.
It's very good to catch up, and I appreciate the time. Thank you.
So best of luck to you and the company and your family. And for everybody else out there, thanks for tuning in. Once again, I'm Barry Saywitz, and we will be back here next week on Let's Talk Real Estate. A special thanks to everybody here at OC Talk Radio, as always, for making it happen. Everybody else, have a good week, and we'll see you back here next week.
There you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California Irvine's Beale Applied Innovation Center.